Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. Well, last week, the markets, the S&P in particular, had just come off an almost perfect setback and hit at its super growth price. That's 3.5 times book. I have to say, after years of seeing this pattern repeat, I should be used to the incredible accuracy that the Standard & Poor's 500 displays at our SVA turning points. But I am still awed by the precision of the overall market. And by the way, when I say book, I want to emphasize that I always mean adjusted book. So if I don't say it, please keep this in mind. Just using straight book value will not produce any useful trading or investing signals for either individual stocks or the market indices as a whole. If it were otherwise, investors would have discovered that reality years, if not decades ago. Prices have to be adjusted for what we at SAC think of as the value of entrepreneurship, and is measured as the dollar cost of holding balance sheets together. The stated book value only measures what the actual cost of the corporate elements are. It does not tell you what is the value of organization, that is to say, entrepreneurship. And being able to measure that is critical to valuing any company. Pardon my digression, but this is important for you to understand, as it lies at the very heart of all of our SVA analysis and is the key to the value that our clients get in our service. Now, as I noted last week when I examined the FANGs, the stocks as a group are all over the place. 3 of the FANGs are hanging tough above key breakpoints. 2 have already suffered a 1 breakpoint decline in the past 10 or 15 days or so, have hit support and are rallying back. 2 have recently broken key support levels, although 1 has kind of scrambled back on side. And 1 still leaves me in a state of utter bafflement. That is the stock which, if anything, should be leading the whole AI parade higher, and isn't. I do suspect that it will be the NASDAQ 100 index itself which provides any final flag for the group, and we do not have anything like that at the present time as of yet. I remind you that our own clients know where these breakpoint values lie all the time, not only for the FANGs, but also for their own portfolio holdings in general. And as the market has become increasingly expensive and the risks have soared, knowing when to hold them and when to fold them is becoming increasingly valuable. If you would like to learn more about our methodology, then tune in to strategicanalysis.ca today. Anyway, let's see what the FANGs did last week. But before we take a close look at the FANGs and what has been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we really appreciate it. Okay, let's start off with Amazon, and look at Amazon. It just keeps flowing along the bubble price. Never seems to get anywhere, but look at, as long as it's on side, that's good. And maybe this little uptick in the fair market value will improve its chances of moving higher. But in the meantime, you know, the slope of that channel, okay, is running at about a 16% compound rate. So just sitting here essentially means that investors are getting at least a 16% rate of growth. Alphabet had broken out over its mid-super growth price and continues to hold in there quite nicely. Now, I have to say, of course, that applying the same reasoning to Alphabet as Amazon only produces about a 13% compound rate of growth still. These days, 13% beats the rate of return on cash. NVIDIA remains nicely within that range between its HB6, 33 times book, and HB7, which is 43 times book value. The slope of this trend, however, is, well, it's running at least 30%, and very lately, with the very high rate of return that NVIDIA has been getting, even faster than that. So staying within that channel, therefore, all by itself is a profitable investment venture. Apple, Apple hit its HB7 and has had a one breakpoint setback. Now, it appears very much as if the HB6 price, again, which is 33 times book value, is forming a base for the company, for the company's stock at the present time. So we will stay with this. However, I do have to say that looking at the latest quarterly earnings, my goodness, the growth rate of this company has slowed very substantially. Tesla, same story, one breakpoint hit, and actually a nice rebound. And the growth of this channel actually has been quite rapid. So far so good. But remember what I've said about Tesla. Is this a car company or is this an AI company? Netflix, Netflix came down, broke down, and actually almost gave me a confirmed sell signal. That's a breakdown at 3% and holding for 5 days. But very recently, the stock has scrambled back on side. So far, so good. But I can't say the same thing for Meta, which has done the same thing, has broken down, but has not scrambled back on side. Finally, Microsoft remains almost baffling. Here is the leading AI company. And what's it doing? It's doing nothing except sliding slowly lower. How to summarize, Amazon, Alphabet, and NVIDIA are holding in. Whether I should add nicely, I'm not so sure about. Please note that both Amazon and Alphabet have to hold here at their respective breakpoints, and they are close at hand. I should add, please note those breakpoints and keep them in mind. NVIDIA gave us sort of a tiny hiccup at its HB6 price, or 33 times book value, its previous extreme valuation high ever, but only for a moment. It has been up and away, sort of, ever since. What I found intriguing, however, was the market's reaction to the third quarter earnings, as astounding and powerful as they were. The market's reaction was less than inspiring. Yes, we got a surge and a jump in price. But the follow-through left me wondering, what is the market thinking? However, do take a look at the slope of the breakpoint channel for that stock. A 30% plus slope means as long as the shares can remain within that channel, investors are definitely winning. I cannot help but observe, however, that more and more chip makers are aggressively trying to push into NVIDIA's space, and the huge profit margins of 70% or more that the company has recently enjoyed may be short-lived. All I'm saying is, if you own the stock, keep your eyes on the breakpoint values, particularly the lower boundary, the HB6, or 33 times book. Both Tesla and Apple have fallen one breakpoint, and both are rallying. So, as above, keep an eye on the lower boundary conditions. I'll ask again, is Tesla an auto company or an AI company? The past 2 weeks, it's been an AI company. As far as Apple is concerned, let's face it, the growth rate of the company is now dismally slow, as only the service side of the company is showing much progress. You may recall what I said some time ago when I quoted Fred Hickey, the author of the High-Tech Strategist monthly letter. Any high-tech company which has to fall on services revenue as its raison d'etre is coming to the end of the growth road. That increasingly seems to be clearly true of Apple. Netflix gave us a preliminary sell signal, which has since been rescinded. So far, so good. But personally, I do not like warning shots being fired across my bow. Just saying. Meta gave us a confirmed sell signal, despite the current and apparent increasingly fair market value trend. I don't try to argue with the market, so I'll have to take that as read. And that leaves me with Microsoft, with its management sounding the caution horn. Someone recently wrote that it seems peculiar that the leading light in the AI universe has not been leading the way forward in the market, and indeed, if anything, is heading lower. Judging from the chart, an even further retreat seems more likely to be the order of the day. That leaves me with providing you with some parting words about the NASDAQ 100 and the Standard & Poor's 500. The S&P 500 hit virtually dead on, and the NASDAQ 100 is hanging in as well. So far, so good. And what some are hoping is a new bull market is still intact. As Robbie Burns might say, hey me doubts. But again, I don't argue with the market. Even Jerome Powell is at sea. Did you catch what he said at Jackson's Hole? He noted that the U.S. Federal Reserve is navigating by the stars under cloudy skies. Anyway, welcome to the new school year. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult.